Is Jeremy Lefebvre with Financial Education right about Foot Locker being a screaming value in the $25 to $40 range? Well, Foot Locker is a retail shoe store, which has never really been particularly exciting or sexy, right? Last time I was interested in this company was late 2021 because it had, taken a dip, seemed like it was at a pretty low multiple, but I was concerned about the potentiality of this being a value trap in a sense, because again, this is a retail shoe business and e-commerce is coming for them. Nike's going heavily direct to consumer, and I'm just wondering what is going to be the future of Foot Locker. I have a hard time coming up with a really lofty vision of what their future could look like. That being said, it doesn't mean that the business is going to go away. And even a business that isn't really growing very much is still worth something as long as it produces some earnings and cash flow and goes at a reasonable multiple and provides some kind of reward for shareholders. Now, one thing I am surprised about is that most of the last 10 years have shown top-line revenue growth. Sometimes pretty decent revenue growth. 9.93 in 2014, 18.72 in 2021. Most of the rest kind of low to maybe mid-single digit, which is what I would actually generally expect most years to look like for a retail shoe company. Now, when it comes to the bottom line, we've had a rough 2022, we'll say. EPS dropping by almost 60%, free cash flow going negative. And, I would be a little bit worried about that continuing into the future. And the future is something I would like to check into. We can look a little bit at what the analysts think will happen this year and into the coming 2 or 3 years and get an idea if Foot Locker is going to stay down in the dumps. Now, analysts seem to think that for 2023, that Foot Locker will basically match 2022 with a very slight, less than 1% increase in EPS, with very strong growth over the next 3 years. 18 to 20% the next 2 years, with a giant 30+% bump 3 years out in 2026. I don't know how much I really buy into that number, but that's a much rosier picture than what I think. I would have probably modeled for anywhere from like a slight negative growth rate over the next maybe 10 or 20 years versus up to maybe like a low single digit, like a 2%, 3%, more or less keeping up with inflation type growth rate in terms of the EPS. However, Foot Locker does do a lot of buybacks. Okay. And as you can see here, shares outstanding decreasing. And those buybacks, they can be a real big driver of EPS when the company trades at a low multiple and they just use any excess money to keep buying back shares. 8% of shares bought back in 2022. So that being said, maybe we can project some growth in the EPS. Now, I am beating the ever-loving crap out of this thing. Now, the tangible book value here of $22.27, if it represents like actual value that they've built over time on their balance sheet, that's super impressive. And the stock is only trading slightly above that right now. So the market is almost assuming that this thing is, in danger of liquidation. But what's more impressive is that even if we take that away, which, by the way, I would want to check the balance sheet just to make sure that this is accurate. This comes from a data feed. You can't always trust a data feed. But if we take that away and only look at the stream of earnings per share and what that value could be, we apply a 15% discount rate, start with the analyst estimates for what they think it will be this year, which is 360. So let me just change that to 360. Don't count the balance sheet for now. 15% discount rate, because again, we're worried about this potentially being a value trap. So we want to apply a high discount rate to be willing to take a risk on this thing potentially, and do a steep slash of what the analysts say the EPS growth is going to be over the next few years. I mean, I'm going mid single digits down to less than long-term inflation. And even still, this thing comes out at a $29 fair value, not even counting the balance sheet, steep discount rate of 15%, and growth and terminal stage growth that I think is much more realistic than the short-term analyst estimates for growth. This thing really could be a value. So I guess even a broken clock can be right twice a day. However, I think we need to be a lot more studious about what the long-term future of Foot Locker will really be, especially relating to their relationship with Nike. I think we have yet to see the long-term effects of Nike shifting more to direct consumer. And the fact is, Foot Locker is, it looks like closing locations, last I read. So this is not something where I'm going to be conclusive, but it is a potential value. And if you're willing to do the deep dive into the 10K and any recent financial results that have come out, any guidance that management has given, separate the facts from the embellishments and really get a grip on this thing, it's something definitely to consider. I don't know if I'm willing to put in that much effort to own a shoe retail store, but I may consider giving this thing a closer look in the near future based on the numbers I'm seeing here. Anyway, ladies and gentlemen, let me know in the comments below what you think about Foot Locker. If you own any shares of this, what your cost basis was, if it's on your watch list today, what your target price is, and what you think the future will be for a business like Foot Locker. That is all I got for you today. Take it easy, everyone. Have a wonderful afternoon.